Hello traders, Happy New Year and thank you for tuning in to this first market outlook from Exness in 2024. I'm Michael Stark, Financial Content Leader, and in this video we're going to be looking at a potential idea for a trade over the next few days, some of the narratives driving the possible movement, and what traders who were to take the position would need to be aware of. But before that, let's look back at the idea and its performance from the previous market outlook. In the last market outlook, the idea was a potential buy for crude oil, American light oil specifically, from the area of around $71.50 with a potential target around $75. The idea was fully accurate, with the movement completing just after Christmas, though it did take somewhat longer than usual to trigger. Now, for this week's idea, joining me to give the idea is Andreas Themistocleus, trading specialist. Thank you, Andreas, for joining us.
Hello, Michael, and thanks for having me.
So what's the idea for this week? What are you looking at? What do you think might be the movement?
My attention for this week is on crude oil again for a potential sell trade this time, with a target around the 68 or around 70 price area. The price is trading in an overall bearish move since late October and has yet to show any significant indications of a trend reversal. The price tested the major technical resistance area, which consists of the 23.6% of the weekly Fibonacci retracement level and the 50-day moving average, and has corrected to the downside in yesterday's session. The 50-day moving average is still trading well below the slower 100-day moving average, further validating the bearish momentum in the market, while the stochastic oscillator is not recording any extreme levels of overbought or oversold, hinting that the short-term direction of the price could head either way.
And what do you think are some of the most important narratives driving a possible move downward by crude oil?
The major factor that is affecting crude oil now is Saudi Arabia's decision to cut the February official selling price of its flagship Arab light crude to Asia. In addition, rising supply and competition with rival producers contributed to the recent drop in prices. Also, changes in production have created higher inventories, mainly because of OPEC and non-OPEC production increases. One example is the United States' constant increase in their crude oil rigs in the last 3 weeks, and it is expected to continue at this pace in the near short term. Also, if we take a look at the commitment of traders report, we will see the large speculators' positions, represented by the green line on the chart, have been declining, further pushing the price of the commodity down.
And for the economic calendar and any other relevant news, what do you think are some of the most important factors to be watching if people were to take the position?
In terms of economic data for this week, we have the US inflation rate, which will be published on Thursday at 1:30 p.m. GMT, and is expected to increase by around 0.1%, reaching 3.2% for the month of December. On Friday, we have the US Producers Price Index at 1:30 p.m. GMT, where the market consensus is for an increase to reach 1.3% against the previous one of 0.9%.
Thanks very much, Andreas, for the idea. So in summary, the idea for a potential trade this week is a sell for crude oil, American light oil in particular, with the target around 68 to 70. Some of the most important narratives that might drive the move down by crude oil are Saudi Arabia's cut of its selling price, increases in American production, and data from the commitment of traders. And the main release that traders are watching this week is American inflation, which is likely to go up slightly to around 3.2%. Remember, this is just an idea for a trade. It does not guarantee success. Don't take our word for it. Do your own research. And from all of us at Exness, we wish you successful and responsible trading in the new year of 2024.